Do you know if you're eligible for the age pension if you own a $1 million house? Do you know how much assets you can have on the aged pension before your rate gets reduced? What's considered an asset and how is its value determined? In this video, I'll give you a simple overview over the assets test and how it works. Welcome, I'm Sabrina from retireon.com.au. In today's video, we're going to have a closer look at the assets test. This test is one of the eligibility requirements for the aged pension, and it also determines how much you can get once you're eligible. So what is considered an asset and how is its value determined? And what are the limits in place and how is your rate going to be reduced if you go over the limit? These are all questions we're going to answer today in this video. So what's considered an asset? Well, basically it's everything you own and that can be turned into cash. But of course there are exceptions and we're going to look at them a bit later in this video. There are exactly 11 assets and assets classes, but we're only going to look at real estate, granny flat interest, financial investments, superannuation investments, income streams, and other assets. But for all 11 categories, I've put links below. So in case you would like to know more and more details, you can go ahead and have a look yourself. The first one is real estate. And here the most important thing first. The house you own and currently live in is not considered in the assets test. And this answers the question, right? So if you own a $1 million house, you can still be eligible for the aged pension. The exception is if you mainly use it for business purposes. But every other real estate that you own in full or jointly, privately or within a business structure will be considered in the assets test. The next one is the granny flat interest. So this rule applies if you live, for example, with your children or any other person and have given them some money or signed over the house or any other assets as form of payment. So what happens is that the value that you gave them in form of assets or the house will be assessed against the value of the house that you live in but don't own. I hope this makes sense to you. The next one is financial investment. Any financial investments you hold will be part of your asset tests. So that's everything from bank accounts to cash, term deposits, loans, managed investments, securities, bonds, and so on. For a complete list, please follow the link below in the description. Now, superannuation investments. If you are under the age limit for the aged pension, then your superannuation is not considered in the assets test. But once you're over the age limit, then it will be considered. However, if your super pays you a pension, then this may be considered in the income streams during the assets test. So that leads me to the next category, the income streams. There are two categories. The one is the pension paid by the super and the other one is income through annuities. And the last one is other assets. That's basically everything else you own, such as cars, boats, caravans, licenses for fishing or taxi, surrender value of life insurance, trading, hobby or investment collections, cryptocurrency, household items, and personal items. So what is excluded? What is not counted as an asset? Well, there's actually a really long list about this and I've put a link below in the description so that you can have a look yourself. I think there are 3 points really worth mentioning. The first one is property or money left to you in an estate. The next one is accommodation bonds paid on entry to a residential aged care facility. And the last one is cemetery plots and prepaid funerals. Well, actually, I had no idea that this is a thing. But I think it makes sense because if you're planning the last chapter of your life, this could actually make a difference in your asset test. Could I ask you for a favor? It's actually been quite some work to get all this information together, and if you like it so far, could you please like this video, give it a thumbs up and subscribe to my channel? I would really appreciate your support. The next thing we should talk about is how the value of an asset is determined, right? In general, the value of an asset is how much you could get if you sold it at market value. And from that, every debt secured against this asset will be deducted. Let me give you an example. So let's say you own an investment property, a rental property that's worth $500,000. Against that, you have a mortgage of $300,000. So 500 minus 300 equals $200,000. And these $200,000 will be the value of this investment property that will be used in the assets test. So now that you know what's considered an asset and how to determine its value, you can do this for all the assets you have and estimate the total amount. And then you need to check if you're within the limits. So here are the limits. $258,500 for a homeowner who's single, $465,500 for a single but who doesn't own a house, and for couples combined, it is $387,500 for homeowners and $594,500 for non-homeowners. So what happens if you own more, if you have more assets than the limits allow? Well then, according to the Social Security Guide on the government website that was last updated in 2017, every $1,000 in assets over the limit will reduce your age pension rate by $3 every fortnight for couples combined and singles. So this is what you need to know about the assets test. I hope I could help you understand how this works and how it may affect your aged pension rate. If you think it was very helpful, then please like this video. And if you have any other questions or comments, please share them in the comment section below and I'll answer them. And if you would like to further educate yourself about everything retirement related, then click on the Click Now button and subscribe to my channel. You will then get notified when I post a new video. Thank you so much for watching and I'll see you in my next video.